On to some other stories now. Increasing new revenue streams, but cash burn and find a route to profitability. This is the threefold path for India's star entrepreneurs. Different companies have charted out different paths to achieve sustainable growth as they deal with the mellowing funding environment. Aditya finds out what's brewing at some of the country's path-breaking startups in the Young Turks Startup Tracker.
We are at Tech in Asia, Bangalore, where some of India's leading entrepreneurs, investors, enablers and facilitators have come together. While it's commonly believed that 2016 will be a year of challenges for the Indian startup ecosystem, largely because of the tightening funding environment, for startups that have a differentiated business model and a set road to profitability, there's little to be worried about. Some investors and even entrepreneurs believe that entrepreneurs should raise capital when it's available and not when they really require. One such investor is Chris Gopalakrishnan, former CEO of Infosys. Let's tune in to what he had to say.
Uncertainties are increasing, and you want the confidence that you can run your business for the next 12 months at least. You will be able to give that confidence to your employees. It's very, very important for the employees to feel that nothing is going to happen suddenly next day. I keep insisting that make sure that you run the business frugally. You have enough cash for the next 12 to 18 months. Don't wait till the last minute to raise the next round. In fact, if the times are good and even if you have money, go ahead and raise your next round.
Moving on now to the entrepreneurial side of things, Shashank Kendi, CEO and co-founder of Practo, believes that his company has significantly cut down cash burn in the last few months so that it can wade through the current environment of challenges.
Growing really strong over the last few quarters, and as the potential of Practo is uncovering, we have regularly been approached by investors. So on those bases, there are always conversations going on. The way Practo looks at itself is, we look at ourselves as a technology leader. So we look at what are the parts of healthcare that we can significantly improve with the utilization of technology. So for us, I think telemedicine is clearly an area in which we can do that, and you'll hear a lot more about the work that we're doing in telemedicine.
However, some companies believe that they have the situation under control. For instance, customer relationship manager Freshness says that at any given point of time, it is only 6 to 8 months away from achieving profitability.
The disciplines that we've had as a company is we've always kept the cash burn at 4 to 5 months of new revenue addition. So even when there was a lot of focus on chasing growth, so we did not think that let's deploy more money and chase growth. As I mentioned, we are growing at pretty healthy rates. Over the last 2.5 years, we've consistently maintained that 4 month as an internal guideline.
While the funding squeeze is for real, this is not stopping new age tech ventures from investing in the Indian market. Singapore-based Quest Ventures, which has backed about 35 startups in all, is now looking at expanding into India by backing some India-based entrepreneurs and startups.
India is a huge market that presents a lot of opportunities. We have been investing in large markets like China and also large, fairly fragmented markets like Southeast Asia. The next natural stop for us is India. I think for India itself, we are interested in companies that continue to focus on digital commerce. So that could run the gamut from risk management to payment systems to B2B, C2C companies.
Investors and entrepreneurs believe that 2016 will be a year like no other. In other words, this is the year that separates the men from the boys. In Bengaluru, Aditya.